Hey guys, so this is the 2019 financial year in review. And my last video was about my financial goals wrap up. This is a deeper dive into the numbers behind those goals and also into the numbers behind the differences, everything from the beginning of 2019 to the end of 2019. Let's start by hopping into Mint and checking out the net worth graph.
So here's the net worth for all of 2019. Now, keep in mind, this is not completely accurate because I'm not able to add in all of the external accounts like my IRA that I have to manually add in every month, but this is going to be fairly close. So you'll see here starting in January 2019 and then December 2019, you don't see much of a difference there. The black line is actually what my net worth is. So let's actually switch it over to all time. I think you can see a little bit better where exactly I am. And as you can see there, you can see obviously like the last 12 here are going to be the most recent. And so you can see that it's fluctuated a little bit, but it's gone up. Now this one here is for January because I'm filming this in January 2020, but the previous 12 here, you see that it did dip down a little bit in the middle, but it picked back up. And just to give you the actual numbers on this, on January 1st of 2019, my net worth was negative $173,682.30. That is different than what it shows here because it's with everything else added into it that doesn't show up here. And then at the end of 2019, my net worth was negative $170,766.24. So that is an increase in net worth of $2,916.06. Now, that doesn't seem, I know, like a big change. And especially to me, it doesn't seem like a lot because I've put a ton more money than almost $3,000 at debt for it to only make a $3,000 difference. But I'm going to take a deeper dive into some of the other things going on here, and you'll see that each of the different things that contribute to the net worth have fluctuated quite a bit, and that's why there's this difference. So the first thing you're going to see here is the car loan. And because the car loan does not sync with Mint, I have to adjust that manually every month when I calculate the net worth. The problem is it doesn't save the historic data of it. So I don't have a graph to show you, and I don't even know what exactly the balance of that loan was at the beginning of the year. At the end of the year, it was about $10,100. And I know that I paid $3,480 toward the loan. And in the year, I paid $1,709.67 in interest. So that's about half of what I paid went to interest. So that is one of the things holding me back and holding the net worth back. And the other part of that, too, is the car itself. So what we're looking at right here is the actual value of the car. This imports directly from Kelley Blue Book, and I just update the mileage every month, and then that way it calculates the value of the car. So with the car, not only was half of what I paid eaten up by interest on the loan, but if we look here at the end of December and therefore the beginning of January 2019, the car had a value of $8,797. Now, of course, I put miles on it since then, so 7,693. So it lost about what, $1,000 in value, $1,100 in value over the year. So that is another thing that has pulled my net worth down, is that this asset is depreciating. The next thing to check out here is my Navient loan. Well, both of them. And this is the larger of the two. So the balance of this one on January 1st would have been $44,151.05. And then for January 1st of this year, or the end of 2019, it was $43,522.30. So that is a decrease of $628.75. Now we're looking at the other Navient loan. And at the very beginning of January 2019, the balance was $17,170.43. And at the end of the year, it was $16,835.10. So that is a decrease on that one of $335.33. But altogether, payments toward those two loans, I paid $3,526.80. And then what went toward interest was $3,451. So while I am making progress on paying it down, I've only made a payment of $75.80 toward principal. Literally $3,451 of that went directly to interest. So I am making progress with the loans, but it's just very slow because there's so much interest built up, and I'm not paying them down yet to what even the original balances were. Now this one we're going to do a little bit differently, because this together, the two accounts, these are my Great Lakes loans. These are my federal loans, and there's one that's like $2,700, and then the rest of the amount is another large loan. But the reason I'm doing them together is because the payment is one payment combined. So it's a little bit easier to just describe what's happening here as one payment. So with these, I can actually give you the broken down numbers, but just for visual effect, we'll look at the whole thing. So with these, on the first loan, the small loan, at the beginning of the year, the balance was $2,775.81. And then at the end of the year, it was $2,789.99. So that means that it actually increased in balance $14.18 this year. And that is despite me paying, combined between the two loans, $65 a month toward it. And then the other loan, it started out in January at $35,877.17 and ended the year at $36,385.67. So that one actually increased $508.50. So altogether, doing math in my head, that's about $520 that the two loans increased, and that's despite me paying about $65 per month. Now, this may not be entirely bad, because after 25 years, whatever I don't have paid off is forgiven. And I'm in year 8 right now, and I'm on income-based repayment. So it is possible that I may not have to end up paying this. But these loans continuing to increase are offsetting the progress that I'm making in paying down other things. So that's why it doesn't look like my net worth is changing all that much. It's especially hurtful, too, that I actually am throwing money at this, and then that money just basically disappears and the loan increases anyway. And with this, with the two loans combined, I've paid $482.24 toward them this year, and $482 has been interest. So literally everything that I have paid toward this year has not hit the principal at all. It's gone just to interest. Now, this goes back to my financial goals for 2019. This is the smaller of my two credit cards. And if we look at it at the beginning of the year, so it would be $857.92 was the balance, and it was then $643.06 at the end of the year. That means that I paid off $214.86 on that one. The goal, obviously, obviously was to get that paid off, and I did at times get it paid down, but with various things happening. Like I think this right here was a car repair. I can't remember what that might also be, something car related. But essentially, I used it mid-year, and then the rest of the year started paying it off, but it just wasn't getting down fast enough. Currently, I've made a payment since here. It's a little bit lower. Obviously, hopefully this one gets paid off this year because it's such a low amount. But taking a look at this other card, now I've had this card longer, and that's why there's more months of transaction history. This goes way back to 2008 or 2010, I guess, when I started using Mint. So at the beginning of the year, there it is. It was $3,844 even. And at the end of the year, it was $3,584.10. So that difference is $259.90. So that's how much I've paid off in a year on this card. As you can see, like it's kind of all over the place. But essentially, I started paying it down. Where's that at? So I started paying it down there. There's a little bump here. I think again mid-year, yeah, June or July, just like the other card. And then I've been steadily paying it off since. So that is another one that I'll be continuing to work on throughout this year.
So anyway, guys, that's what I've got for the 2019 year in review. I hope that breaking down the numbers like that showed you guys more so why there are some things that are dragging my net worth back, and those obviously are the things that I'm going to be working on to try to tackle my debt and to do it faster. Essentially, the solution is each one of those things that I can get rid of, it's going to save me that interest that that account is charging every month. And therefore, I'll not only have more money overall, but the money that I do put toward debt is going to go farther because it'll be paying off principal rather than interest. And someday, I'll just not have to put any of that money toward debt at all. And as each one of those accounts falls, and then eventually when I get to the point where I don't have any more debt and I can just keep the money and it increases my assets instead, then that's going to be where you're going to see this journey go faster and faster and faster. And I mean, that's why it's called the snowball method. It works faster and faster as you get this stuff paid off. As you can see, the small credit card is the goal right now, and that's going to be within the next few months. There is a potential it could be next month. There's some stuff going on that I got to tell you guys about. By the end of the month and a couple more videos from now, I'll have a big update about what's going on with that, but it is possible that's going to be paid off next week, actually. So let me know if you like this type of video. I haven't done this type of year-end review before, but if it's something that you guys are interested in, if you really like to dig into the numbers like that, I'll start doing that at the end of every year. The other thing is I will have a video up here in hopefully just a few more days, and that is going to be my 2020 financial goals. I'm basically going to take everything that I learned in 2019 from the goals and from all the stuff on the back end that I just showed you, and I'll use that to plan out 2020. So stick around to see that, and if any of you have set your 2020 financial goals for the year, go ahead and post them down below. If I like your idea, I'll set that as one of my goals myself for this year.